Hey everybody, Matt Faircloth here. Welcome to the DeRosa Insiders live show. If you want to learn more about DeRosa Group, go to derosagroup.com and please enjoy this program that is dedicated to help you learn all about the real estate investing business so that you can take your real estate investing activities to the next level. Let's get into the show. What is going on, DeRosa Insiders community? This is Matt Faircloth and welcome to the DeRosa Insiders live program. Guys, I want to talk to you guys about housing prices and the housing market, right? Because what you guys might be looking at is, Matt, interest rates have gone up, and in essence, they've doubled in some markets and in some, depending on the type of mortgages you're getting. And so you might look at this and say, if rates have doubled, then housing supply and the velocity of housing being sold should be in one half, should it not, right? It should be directly correlated. Yes and no. What's interesting is that housing absorption is at or around what it was pre-interest rate spike, right? Now, there's been some decline. Some folks in this article that you guys can grab are showing there's been in some markets a 5 to 10% decline in absorption, but that is nowhere near the interest rate increase that we've had. Why? Let's go there for a second, okay? There is an enormous housing shortage in America. A lot of people, first of all, so we don't have enough housing. So a lot of people are still looking for housing and they're going to pay what they can pay for a house, whether they like it or not, even with rates being higher. That's number one. Number two, with rates being higher, less people are selling. If you are out there with a 3% mortgage on your single family home, you might not be selling. You might decide to, as the retirees, as my own mother likes to say, age in place. You might say, you know what? I got myself a 2.5%, 3.5% mortgage. Why would I sell this and go upgrade or downgrade to other housing that's going to cost me 6.5%, 7%? So less houses are for sale. So supply has gone drastically down in America in housing, while demand is still there. People are still need places to move. There are millennials that are creating families that are looking to expand and buy their own home, right? There are new folks moving to the country that need places to live, that want to buy a house as well. And there are just people looking for housing for one reason or another. The demand has not changed, but supply has gone down, and that's caused the need for housing to be still high as compared to what it was even when rates were much lower. So the thought process that rates drive housing sales is partly true. It's partly true, but still, you've got supply on one side, demand on the other. Picture like an X like this, with supply being one, demand being the other. Interest rate is one of the factors that drives supply and demand, but it is certainly not all of it. There's other things like just a supply shortage of housing. And also, I'll give you one more statistic fact. A lot of new delivered housing is being built now, but the amount of permits that builders and developers have pulled for new stuff they're going to be building and that'll be delivered in the next 6 months to a year is at an all-time low. So that means there's not going to be much housing built in the United States over the next year or two. What that means is that regardless of what happens with interest rates, demand for housing is still going to be really high. And so will there be more supply? I don't know. Maybe if rates go down, people will decide that, okay, now it's a good time to sell my home and move. That will create an increase in supply, perhaps start absorbing some of the demand that's out there. But it's not going to happen through builders, because a lot of builders have built out. They're selling what they built now, and then they're going to take a pause. They're not pulling permits for new stuff that they're going to build. So there we go. So my bottom line prediction for housing, guys, is we're going to see continued demand, continued high velocity of housing. If you are a real estate investor, as we are, and as you guys may be as well watching this program, I firmly believe that getting into the housing creation space, fix and flips, new construction, if you got the chops, the knowledge, and the capital to do it, new construction is a great place to be. It sounds counterintuitive given how high rates are, but guess what? Things don't change, or things do change. Rates will be going down at some point, and the demand is still going to be there. And so I believe that creation of housing for people to either lease or buy is a great space to be in, whether it's new build or fix and flips. That's my tip for the day and my prediction of the current market status. If you could please drop that article that we're referencing here for our listeners and our watchers, for you guys to check out the article. That was a good one here on AOL Finance. You guys might want to check out for more ideas, more inspiration. That's what I got for today. Today's state of the market tip, guys. Take care.